Hello, traders and friends. Hope you're having a good weekend. It's really cold and snowy here. Real bad weather out. At any rate, you can follow me at Gumby9662C on Twitter. And I do have a trading group. It's free if anybody's interested. You just give me a tweet and I'll let you know about it. But at any rate, some things I'm looking at. I think something you really have to keep a very close eye on to see any type of reversion lower in these markets is your dollar and your bonds and your interest rates. Okay? And I'm going to start with that and then go over a few other things that I'm thinking about. But I'm pretty darn bullish on these markets. And I think what we're going to see here, well, I'm going to start with UUP here. And on the daily, we broke the 20 SMA, suggesting we're going to get some weakness in this. And we broke out of the upper distribution. But on the weekly, we're still holding up our 8 SMA, and that's what I use as my leading indicator. So we'll see what happens this week, but I'm still pretty darn bullish on the dollar, thinking we're going to get some a little bit of consolidation here for another move higher. Now, what to justify my logic on this? This is the TNX, a very long-term contract, long-term chart. And what's happened is we've had this 200 or 320 MA that we have been trending along since 2009, and we've been hitting highs along it, and we really haven't poked above it until just now on this, and we're testing the longer term trend line right now. And but we have bumped that multiple times since 2008, since 2008, and we're just finally breaking out of that. So I am really thinking this long-term trend line is about to get broke a significant way, possibly even by the end of the month. Now your bonds, your TLT, okay, this 10-year U.S. Treasury, and what happened was Thursday we broke out this descending trend line on the bonds, but Friday we had a little bit of profit taking because we came up and we hit price resistance, and we were right next to this the 50 SMA, and we came off that 50 SMA. I'm thinking we're going to once we cross over that 50 SMA, which wouldn't take much at all, we're off to the races, and it could happen very easily this week, extremely easily. So just keep that on your radar. We're already above the SMA on the and we're sitting right on that downtrend line as we speak. So unless we were to gap down on bonds Monday, I mean, there's a pretty good chance we're going higher on bonds this week. Now, if my theory is correct and we do get a push in the bonds, which with interest rate or with all the earnings this week, it's hard to say it's going to happen or not, but we do have a nice tight daily Bollinger Band squeeze on the financials. And Friday, the banks start reporting their earnings. So this is going to be quite interesting. I think what we're looking for, the banks really want to get in this other channel, which right now we're still below it. So I'm thinking we're going to get a pop up in the banks. But we'll see. Expectations are very high for the banks, and their earnings are probably not going to meet expectations, to be honest. If anything, they're probably just going to be meeting their guidances because interest rates haven't really improved that much. But they could make a lot more money off their brokerage fees and stuff. So just keep that in mind. Some charts of interest here. Your NYA, that's your New York Stock Exchange Composite, which is one of your broadest indexes. We are right up here at all-time highs. We even closed Friday right next to Thursday's all-time high, within just a few very, very tight points. So just keep that one in mind. The daily MACD looks like we're turning positive for a move higher. So that's why I'm not very bearish on these markets. And we could get a considerable move here, considering we've got an inverted head and shoulders here, and we're just breaking out right now. So the measured move is going to put us up considerably higher. Your NDX, which is your NASDAQ 100, the top NASDAQ stocks, it's putting in an all-time high. As of Friday close, or right near the close, we put in an all-time high. So keep that one in mind. We're just a few points off all-time highs on the NASDAQ 100. Now, some things that are underperforming. One, main XRT being your retail index. I think it's got a little bit more weakness, but the markets are going up even against the retail weakness. So that's a very bullish sign. And I do think most of the downside risk in retail is already priced in. And we did have a better Christmas than we did last year. And I think most of the bad news is already out there, in my opinion. And apparel's what really got hit because I think the weather wasn't that bad, so people really didn't get out and do a lot of shopping for clothing. That's just my opinion. Another little danger area we got to be concerned about are our transports. The railroads and the airlines, they've started diverging a little bit from the major indices that are rallying higher. And Dow theory suggests that if you're going to put new highs in the markets, the transports should lead the markets. And so just keep this one in mind. We're holding up so well so far this year on transports. So let's see if we can get a resumption in transports to drive the markets higher. Another warning sign that I do want to point out here. Okay, we have a stochastic down here on our RSP equal weight S&P 500, and when this comes out of the overbought area and it starts to drop, that's typically an early sell signal for some market weakness. Okay, if you look back here in history, and what's happened here on our stochastics, we're dropping down already. Okay, and we're holding out up here at the top. So this is a bearish take on the market. So we're getting some mixed signals here. The last thing I'm going to cover is oil. And even if the dollar comes down, I think oil is still going to get a bid behind it. I'm thinking oil's wanting to go up to $40 a barrel. And that's right up here where my trend line is. And that'll finish the pattern out. Because we've broken out of this inverted head and shoulders. And we're putting in a higher high, or putting in some higher highs here. And we do have a Bollinger Band squeeze going on the daily, so we could get a significant move here this week. So keep that one in mind. Our MACD is even supportive of higher prices too. So bottom line is, I think we need a driving force to take these markets higher. And the two things I'm really watching here are the crude and interest rates. If we could get both of those moving higher, I think this market's going much higher. So that's all I got to say, and hopefully you guys can all agree with me, and just be careful if you're taking any shorts. Okay? Thanks a lot.